Hi there, and good morning, and welcome to the Trade Setup right here on BloombergQuint Live. It's Thursday, and the start of today's session may look like it's going to be flattish, but there could be individual excitement in a bunch of spaces, and we'll talk about all of those. IT is firmly at the center. But first, what the US markets did in the overnight session. And I think in the run-up to the Friday retail sales data, the US markets are now becoming very, very quiet. I think that seems to be the key thing that is governing the US markets. So maybe in the run-up to the retail sales data that comes out tomorrow afternoon or evening their time, I think we'll have a flattish move in the US markets as well. Remember, the stimulus is still a deadlock. So we don't have any clarity thereof, and the presidential election comes on closer. If anything, there are a bunch of reports that are coming in right now urging people to buy hedges. So there's so many. I think there's an Edelweiss note which says that people might experience extreme volatility, and maybe you could buy the 11,000 put, for example. Anyways, we'll come to that in the trade setup. What does all of this mean for our markets? That's the key question. I think a flattish start at what it means, because when I look at the rest of the Asian screen, or when I look at the SGX Nifty indications, it seems to suggest that we will have a start which is flattish to maybe marginally negative in the session today. So that seems to be the order of the day. This is Asia, of course, and again, flattish to marginally negative. I think the SGX Nifty, the last time that I checked the SGX Nifty, it was down about 0.12% or thereabouts. So it probably is a start which is going to be very, very flattish in the session, and therefore even more emphasis on what individual movers do. Yeah, about 0.22% higher. Okay, so it's bobbing between this red and the green mark. The internet shows the SGX Nifty as being down 0.12%. But irrespective, all I'm saying is that things look fairly placid and flat when it comes to the markets today. Now, the thing is, there is a BFSI-led uptick in our markets. In yesterday's session too, when you see it was banks and NBFCs in particular, which had a really good move. And you never know, that could well continue in the session today. But I think the Nifty will get support from the Nifty IT in the session today, predominantly INFOSYS. But does that change the mood a little bit for the others? I think yes. And frankly, not just INFOSYS. I think Tata Elxsi's numbers too show that maybe Midcap I.T could now see some accumulation in trade. That is Mindtree today that comes out closer to 21st and 19th and 20th and 21st. We have L&T Tech and L&T Info. So those numbers come out as well. We have HCL Tech coming out on Friday, the third largest IT vendor. So information technology remains firmly in focus. I think there's a buzz of strong numbers, strong quarterly numbers from the cement counters, which might keep the cement stocks active. Some of them were active in trade yesterday or day before too. But it'll be interesting to see. I think Jeffries came out with a note on cement, which kept Ultratech and some of the others active. But I'll watch out for the cement counters over the course of the next few days as well. And which brings me essentially to the key point, right? What are the key numbers that one should be watching out, or the cues that one should be watching out for in the session today? So as I said, Midcap I.T remains in focus. Cyient, Mindtree, both of these important. South Indian Bank, I think the expectations were that the numbers could actually turn out to be better. So do watch out for that one too in the session. And Trident, textiles seem to be doing okay in terms of stock price movement. The belief is that the ones which are able to manage the supply chains well are getting orders, and therefore those should do well. So therefore that's the other pocket that all of us should watch out for. But stocks that one should monitor, well, the no-brainer is INFOSYS, isn't it? And all of us know why. So I'll still lay it out, because some of you might know that the results are above estimates, which they are, but the key factors are these. One, they have raised the FY21 revenue guidance to 2 to 3% from 0.0 to 2%. So both at the lower end and the top end, I think there is a substantial uptick. From 0% to 2% is quite a telling uptick on the bottom end of the guidance, but the top end too has been raised, which is great. The FY21 operating margin guidance has been hiked to 23 to 24%, which is also very notable, because that has a big impact on how the earnings shape up. And clearly, everybody work from home is all having a notable impact on the margins of the operational metrics for all IT companies, and INFOSYS in particular. They've said that salary hikes and promotions will be given from January next year as well, across levels, and which is also a telling thing. Now, purely in terms of what does this mean, I think bunch of brokerages have come out and raise the target prices on INFOSYS. They are saying that the valuation multiples to TCS should narrow, etc. I also thought we should get you a perspective of somebody which is a global firm. So COWEN, you've heard MD COWEN a number of times on various media outlets, including BloombergQuint. So their analysis is that the 2Q results are a beat on revenue and margins. They believe that the digital strength continues to offset the core and the legacy pressure, and the pricing dynamics are better across the board with reduced discounting behavior. So that's the verdict that is coming in from COWEN and company. When you look at all the other brokerages as well, by the way, all of them have unequivocally or unanimously raised prices for INFOSYS. So you have to be mindful of that as well. I think, let me pull out. I think Macquarie said that they have raised the target price to 1410. The outperform rating has been maintained. JP Morgan has maintained the overweight rating. The price target has been raised to 1300. So there is lots that's happening within INFOSYS. The ADR was up and active. Keep that in mind, viewers. The ADR was up at a point of time when I slept. The ADR was up about 5%. It didn't end 5% higher, but it ended higher for sure. And therefore, it should be viewed as a net positive for INFOSYS. Let's wait and watch how this one reacts in the session. The other one, while it's all about INFOSYS, yes, the others have not done too badly. I mean, Tata Steel, BSL numbers are very strong, but look at Tata Elxsi too. The numbers and the commentary, more importantly, from the company. This is what the numbers look like. Revenues up 7%, net profit 14.5% on a quarter-on-quarter basis. That's no mean feat. I think it's an excellent performance on the bottom line front. And one of the key reasons is this, right? The margins. Look at the margins there. 27.5% versus 23.1%. That's a telling improvement on the margins, and therefore should show in the stock today. I wouldn't be surprised if it's a positive reaction. The margins have improved, of course, due to lower employee expenses, naturally so. The other thing, viewers, is I'll just read it out, that the MD and CEO of the company has said that the company is going into the second half. I'm reading it out. Saying that the company is going into the second half of FY21 with a strong deal pipeline across verticals, and that the company is back to pre-COVID momentum and expected to continue in the second half of FY21. This is the statement that I read out from the MD and CEO of Tata Elxsi. Shows you the confidence, and I wouldn't be surprised if this one does really well in the session today. Might outstrip INFOSYS in terms of gains. Den Networks is the other one. Numbers came out. Margins showed a telling improvement, 18.5% versus 14.6%. Lower content costs and employee expenses aided the margin improvement. The net profit up 2.5 times, aided by lower taxes. Again, good numbers, should do well. Let's wait and watch how this one does in the session today. So these are a few names that I've kept on the top of my mind. The other two pieces of stock market news that I want to give you is one brokerage note and one the volume data. So in terms of volume data first, maybe let's pull that one out and then we'll go to brokerage, or vice versa. However, okay, let's stick with the volume data first. These are the stocks which did really well in session yesterday and had notable delivery percentages. Lemon Tree up 9%, 45% delivery volumes. Gujarat Gas, the other one, which was up about 4.2%, and the delivery volumes were about 40%. It's a stock that was pummeled out of shape. I think went down all the way to 283 or thereabouts and then has bounced back. So notable bounce. And some others include an SBI Cards, which was up about 4% with 33% delivery percentage. Keep in mind, for SBI Cards, the stock has ended at a record high with the biggest single day gain in 3 months, which is that 4% gain that happened yesterday. So it takes it to record high on decent delivery percentages. Do watch out. Last but not the least, I will watch out for Ashok Leyland. Credit Suisse has come out with a note. Very strong commentary or belief from Credit Suisse side when it comes to Ashok Leyland. So do watch out for that one as well. They have upgraded the stock. The price target has been hiked, and their reasons or the rationale for their uptick remains that the credit CV cycle is probably poised for an upgradation and replacement, which is the strongest amongst all the others. So do watch out for Ashok Leyland. It'll be interesting to see how this one does in the session today. But that's all that we have on the trade setup. Have a profitable day ahead. Watch out for Nifty IT.